All right, welcome to Genius Wednesdays. We are here with Steve Kwan and the Coin Genius team. Steve, if you'd like to take it away.
Okay, I picked two topics that I wanted to look at, and some of you may have already heard about these and heard my explanations, but one is what is referred to as Bitcoin dominance, and we want to step further here at Coin Genius to recognize that there are also four hard forks that are widely recognized as the Bitcoin forks, and to show and kind of give an explanation of how Bitcoin dominance, whether it's 50, 60, or 66.7 last I checked, it's actually significantly higher. And the second topic was to just touch on the coin market cap ranking system and some of the metrics that bumped some projects with larger market caps out of the top 200, and I'll go as we go with the presentation, you'll see. So this was about an hour ago, so if it's slightly off, bear with me, but total market cap $231 billion for coin market cap listed coins. Bitcoin is 154, hence Bitcoin dominance. I know this is starting with baby steps, but I just wanted to show people in case they're unfamiliar with that. Now, the four widely recognized forks are Bitcoin Cash, BCH, 4.3 billion market cap, BSV, Bitcoin Satoshi Vision, 1.6 billion market cap, BTG, which is Bitcoin Gold, 149 million, and Bitcoin Diamond, which is 102 million. Now, to some, it may seem like, oh wow, those last two are only 149 million, 100 million. Why bother even listing those? And I will tell you. Well, those rank both in the top 50 in terms of market cap, where Bitcoin Gold is actually the 39th most capitalized project, and Bitcoin Diamond is number 48. So although they seem small in comparison, they're definitely top 50 projects by market cap, so we should all recognize that. Now, the four forks equal $6.2 billion. Of the total market cap, they represent 2.68%. Couple that with Bitcoin's 66.7%, and those, sorry, my screen's moving a little, but those five comprise 69.35% of the market cap on the top line. You'll hear me talk about top line and bottom line. Top line is just kind of what you see is what you get. Bottom line is there's two pieces of the puzzle. There's Bitcoin, or in this case, the Bitcoin and Bitcoin family of forks, and I misspelled those two words. Let's see. So imagine cutting two pieces of pie, and one is 2/3, one is 1/3. I'm gonna skip the Bitcoin family of forks dominance and just move on to just using Bitcoin. For many small cap projects that don't have a lot of trading volume, the Bitcoin price essentially is what the driver is. You know, things that may not trade every day. If the market is 100 Satoshi, 200 Satoshi, then it's basically 1 cent or 2 cents, depending on where, if it trades on the offer or the bid. So it's very important where Bitcoin price is. Now, here is the explanation of the bottom line dominance. So as I was saying with pieces of the pie, the first is 2/3, that's Bitcoin. Now take the second piece, that's still comprised Bitcoin still has a huge factor in their US dollar price. So they're 2/3. They're also 2/3 of the 1/3. And it comes out to 88.89%. So Bitcoin actually, the cash price represents about 89% of the market. Now, this was somewhat simple. I try to keep it that way as I know that people have different levels of knowledge in the blockchain and Bitcoin space. Are there any questions on how I look at, or we look at, the Bitcoin dominance and I guess the bottom line Bitcoin dominance? Any questions, comments, concerns? No? Okay. Moving on, the next topic is really kind of wide open, and it was talking about the liquidity profiles of the number 101 coin. Well, 101 today happens to be Decentraland. I'm not very familiar with that one, so I couldn't tell you exactly the liquidity profile, but I can tell you, looking at coin market cap, it has a $32 million valuation, and it has $7 million in daily volume. I guess that's somewhat reasonable, 25%. Now, I'm going to look at number 102 and 103 to kind of show some differences. Number 102 is Kyber Network. It has a $32 million market cap. It is trading $41 million a day. I don't know much about this one. It's not something I'm very involved in personally, but I did some research and I've done research in other investments, and guess something that has 100% turnover a day would be hard for me to tell someone that's a solid investment. Now, I look at a lot of projects right around here, this, not 101 plus or minus 10%, and notice that right outside of the top 100, the top 100 to me have more reasonable or believable volumes, where this ELF is 25% of its float is trading daily. Nash Exchange 5%, Capital Vendor 1%. Those numbers are more in line with things that I've seen in other asset classes. $200,000 on a 37 million, that seems to be believable to me. Start to get up to here, a $35 million asset, Beam, has $53 million of volume. I don't want to say if it's true or false, but it would simply lead me to look at the exchanges and actually watch the volume on something like that. Now, the next one, number 100, PPT, 2.4 million volume, $34 million market cap. Reasonable. I could believe that. You start to get assets outside of Tether or a stable coin per se that have volumes in excess of the market cap, it becomes harder to believe. And we see a lot of that right outside of the top 100. Now, the next point I wanted to touch on is the CMC not top 200. So number 110 has a market cap of 30 million, skipped over a bunch. 191 is 14 million, decreasing, decreasing, decreasing. Number 200 is 12 million. Now, right outside of the top 200, there are 200. Actually, this is the break right here. There are 64 projects that CMC said their volume, or 69 rather, that it did not meet some coin market cap metric. Primarily, that's because the exchange was unwilling to share their API, or had not unwilling, but maybe had not shared it at the time that they made this change. So the volume can't be verified. And on some of these, this is a Word document, but on some of these between 200 and 269, if it's something you're interested in, I would urge you simply to click on the item and see what exchanges it's trading on. See if the volume looks, good or not so good. This one I do know, I've heard of it. Telos. It was a $100,000 project. They did some rebranding, got on some exchanges, and now it's a $15 million project. Maybe they turned it around. I don't know. I didn't do a ton of research on that, but I would show you that I've heard of this LA token, and their volume seems reasonable, but that's because their coin market cap is only showing the volumes on these that have from exchanges that have acceptable APIs. And here's another one I've heard of, Strong Hands. I guess I'm surprised that it's a $33 million market cap, but I haven't really checked on that in a while. And a lot of these are just, they could have gotten bad luck because the exchange they're on didn't share the API. But I guess to me, if I'm investing in a project that's worth 50 or 100 or even $500 million, I mean, 500 million puts that project at, let's see, it would be right around number 22. So I don't know if many of you are familiar with it. I'm not. MEXC token, INO coin, Insight Chain. I mean, these would all be top 50 names, top 40 names, but something according to CoinMarketCap seemed off. So I would simply tell people that if interested in these, make sure you do your due diligence, because CoinMarketCap being a fairly reputable site and well known, been around for a while, they saw something off in the pricing, the Explorer, or the API. And that's pretty much the presentation I have. I would just open it up to everyone else. Any questions, any thoughts, or someone wants to change topics, that's fine. Like, I just wanted to briefly kind of go over these two these 2 points, as I think they're pretty important. So Christina, I would hand the mic back to you.
Well, thank you so much, Steve. I would actually love to pick on Tim Hesselsweet and get his thoughts here.
So I would love, I guess, for this is like another, so we're working on the top 100 coins and a taxonomy, and Kinjal, I think, is really spearheading that effort at this point, in terms of having CoinGenius be the most credible source of information. I think that we need to have our, people need to come to our site and do all of this digging rather than going to CoinMarketCap. But they've done like another level of due diligence that we'll need to put on the roadmap eventually, in terms of sort of vetting coins and approving them. And I think we've done more on that than I know about. But yeah, so interesting and good stuff, Steve.
Yeah,
piggyback on that, and sorry, Tim, go ahead. I was just going to dig into exactly how we're doing those things to kind of identify longevity indicators and how they might respond to event triggers and just all of the different behaviors for those top 100.
Right. Cool. So, I mean, I guess what I was going to say is, what have we done to compare against other top 200 lists so that we could see where those rankings may be different, or top 300 lists, so we can see where CoinMarketCap is making the changes, and then compare where other sites may not be doing the same thing and they might have different rankings for the same coins. And then, is there some way that we can put on our site the Coin Genius top 300 in our own ranking numerically based on market cap and other metrics that would be, more believable than any of the others, or a combined Coin Genius kind of matrix that would include a number of other sites that have, put on their own spin, but we drive that down and pick it and number it ourselves. I'm just a thought.
Thanks, Tim. And I would say that Jeremy is working on sourcing the coin roots data, which comes, I believe, directly from exchanges, and that would be a way for us to source more of a raw data stream.
Nice.
Rather than, so right now we are relying a lot on CoinMarketCap, Crypto Compare, and CoinGecko are the major sources that I'm aware of.
Right. Have we done anything to compare all three and see where those changes are, or no?
No, we've just got too much other stuff going on, Tim.
Okay, got it.
It would be cool to be able to do that, but I think a more relevant comparison is looking at those top 100 coins and saying, these are the attributes that we would watch. And I think that becomes a list of 100+ different attributes, all the way from their sentiment, who are their influencers in the crypto Twitter sphere, is there big announcements, news, media, are they sticking with their development? All of those things can indicate like a coin or a project actually like moving forward. So I think that there are an absolute ton of indicators that we can be looking at. And I think that it's very interesting to look at data sources that can provide that and update that dynamically.
Got it. So maybe for further down the roadmap, we would establish our own top 300 or whatever it happens to be, and ours would be far more credible than the other ones in the marketplace,
Yes.
like market cap.
Yes. And the beauty is we can create whatever we find meaningful, we can create it and it's ours. So we don't have to compare to CoinMarketCaps. They don't share how they came up with those calculations. We will be able to prove mathematically why we got to that,
Cool beans.
Well, I can add a little bit on coin. I guess CoinGecko, I've looked at many times, and I use frequently because a lot of my investing in knowledge is the technical trades are in your top 10, your Litecoin, Ethereum, but the research-based trades, which another day, another topic I sent over. CoinGecko has a lot more projects, and they have, I guess, been a little harsher on making sure that explorers match and that exchange volume is credible, where I know on their site they have, I guess I call it red light, yellow light, green light, where volume that they deem suspect, they'll just put a red light by. They're not saying it's good or bad. They're just giving you a heads up. And I'm just kind of eyeballing some of these projects on CoinGecko that are, in the 201 through 269. They're either volume based a problem, Explorer doesn't match, or the circulating supply is greater than. I guess these seem like things that are obvious to me.
Sorry, can you share your screen so we can see what you're talking about?
Oh, sure, yes.
Steve, what do you mean by Explorer?
The blockchain explorer. Here, I'll just
where you can verify the transactions and see what's happening actually on the blockchain on the distributed ledger.
Got it.
One thing that we need to consider, and something that's probably a really good idea. Number one, Steve, this stuff that you're talking about is not stuff that's necessarily being spoken about by a lot of people. This is stuff we should literally be extracting from these conversations and putting out on social media, and start making statements and start giving people ideas of what's happening in the space. The second thing is that we should really be joining conversations on social media, because people in crypto especially are very sensitive to different types of approaches like this, including the quantification of things like market capitalization for digital assets. That's one example, but there's a lot of conversations happening around this stuff and how we're quantifying the actual price of a coin or what you would deem as the top 100. So providing these methodologies for people in the greater community and joining conversations and sharing ideas and saying, hey, what do you think? Not only provides credibility for us as Coin Genius, but also gives people the opportunity to give us another way to look at the situation perhaps, and give us more ideas to help refine our products. So just a thought I wanted to share.
And on top of that, I thought that the like the funding landscape of crypto ventures, in some cases is in the form of like an ICO, so it's a coin, and other ventures are are funded through traditional venture financing. So the landscape is becoming more complex about how these entities are domiciled and funded and stuff like that.
Yes, and to that point, we have some partnerships with some of these incubators and some of these funding folks when they make public announcements that we can then tie that to milestones for projects as well. So that is definitely another data point that I would love to have in our ecosystem and be able to show and quantify the progress of a project.
Yeah, I think two easy ones, Christina, on that vein. We're capturing one of them right now, which is whale alerts, right? So we're just going to have a list of like the top trades by price. Like, so if somebody moved 100 million in Bitcoin, 50 million in Bitcoin, or 10 million in XRP, like we'll just show that in terms of the latest trades at that point. And then also the second one that we haven't leveraged yet, or I think it's called trade alerts or something like that. It's a Twitter profile, and I'm sure they have a Telegram, in the same way that we're capturing whale alerts. Anytime a project is listed on any exchange that's significant, they just post a tweet in real time. And sure enough, almost every single time I've checked, the price goes up. So it's another one that's just a low-hanging fruit opportunity to expose.
Okay, here, I'll give you just an example of on my presentation. The number 202 project was INO coin. Again, I just picking this random. I'm not bullish nor bearish it. I have no position in INO coin for disclosure. But I'll show you the CoinGecko screen. Here you see they have no ranking because CoinGecko is not aware of their circulating supply. Now I'll move to, as you can see right here. Can everyone see this screen? No circulating supply, hence no market cap. Now, I'll move back to.
And that's kind of an important one to have that statistic for.
Correct. And now look at now
yeah.
you'll see on the coin market cap of why it's a question mark. Can everyone see coin market cap INO now?
Yes.
Any problem there?
No, I see.
Oh, we're still at CoinGecko, actually, Steve.
Oh, you're still at CoinGecko. All right, let me try one more time. Oh, okay. Present a window and all right. How about?
Yeah, this is CoinMarketCap now.
This is CoinMarketCap. Okay, let's see. Oh, this is the wrong window. Sorry. Let me get out of this. And
Steve, I think if you just flip tabs, I think it may continue to present.
okay. How about now? Can you see INO coin CoinMarketCap?
Yes.
Yeah,
Okay.
there you go.
Now, see, they have a circulating supply of 180 million out of 1 billion, so it seems reasonable to me. Can you see the Explorer that I just pulled up, or is it still on? It says Etherscan.
You're there. You're good.
Okay. So total supply 1 billion. Let's check their other Explorer. Oh, let's see. Token information. Total supply 100 billion. So this Explorer is showing their price as if every coin is out, but coin market cap has it at 180 million. So that most likely at first glance would be the reason why they have a question mark by the rank. And I don't know, call me old school, but if I had a $300 million market cap on a company, I would probably have somebody checking that pretty quickly. You know, I could go to a Discord or Telegram of projects in the millions of dollars and say, hey, there's a problem with your block explorer, and usually get some sort of response within a few minutes. And if there's something off, you know, they put the exchanges in maintenance, and you know, until they figure it out. Where here it doesn't look like there's a ton of volume anyway. I mean, you're talking 2, 4, 6, $9,000 in volume in a $350 million project. I question some volumes to the upside, but this would seem abnormally low for something of that magnitude. I mean, we're talking at $2. Oh, I don't know, 4,000 coins trading out of a billion. Something probably needs to be checked there. But again, I'm not bullish or bearish INO coin. I have no position. You know, I have nothing to say for or against them. This is simply the one I happen to pull up. And I would pass the mic back to Christina.
So data integrity is something that we could surface and bring to the table, and I think it's kind of neat that they will still spotlight these coins, but it's but maybe shine a I'm not sure light on it. So I think that's kind of a cool feature. But that's definitely an area where we can dig into exchange APIs and you know, other things to really make sure that our the rankings and market caps and things like that we compute are good.
Yes, I would agree 100%. And as I glance over these projects in the 201 to 269, I see some of the same exchanges that, you know, have listed many of these projects. So the project may truthfully be a great project and totally on the up and up, and the exchange is the one who's asleep and hasn't paid attention to coin market cap. I know that seems unfathomable, but I don't run an exchange, never have, so I couldn't tell you. But that's definitely one of the things that I've noticed. And yeah, that's really,
How
yeah.
about the idea of perhaps when we put down the various information, so the, you know, what the market cap is, the volume, you know, total distributed coin, total allotment overall, et cetera, et cetera. If we put a V with a green V next to whatever we've verified as being accurate, so that we have an accuracy rating right there in an easily identifiable way that shows that we've done the research, we know that that's accurate, as opposed to being guesswork.
I think that sounds good, man. You know, having my belief is that as long as you have things like this, where it's like, oh wait, this is worth 500 million, but wait, on this side it's only worth 5 million. you're going to have a lot of people hesitating to buy because, you know, if there's that much of a discrepancy, and I guess to me that is what, you know, constitutes kind of the larger coins here. I'm going to share this screen.
Hey, Steve,
Yes.
real quick question. What does that tell you specifically, like in your own words? If I'm looking at the top 20 exchanges and there's a tremendous price disparity between the actual price of a particular asset across those, and the spread's like $15, or if it's like $100 asset, $20, what is that telling you?
That my first check would be checking a Discord, Telegram, or Twitter to see, was there a 51% attack? Was there a fork? Was there some sort of split, reverse split, rebrand, or something like that? Because I've seen that on smaller exchanges and smaller projects where, you know, they're basically running two chains, and you have one price trading, you know, 20 Satoshi, the other exchange is trading 40 because one exchange has not gotten around to realizing that they're trading something that's going to soon be worthless. On a larger scale, I'm going to pull up one of my personal favorites, and it's called Bog Coin for those that
So
I
Steve,
know. I call it a mini Ethereum. Don't ask me why. And
like Steve, before you
sees,
get to the Dogecoin, I just want to dive a little bit deeper into that question now. So, like I said, like in terms of if you had a coin and you looked at 20 exchanges, and I'm not saying that there's one exchange specifically where there's like a huge discrepancy in price. I'm saying like across all the exchanges where you see something ranging from $100 in the asset price all the way to $120 and then a bunch in between. What is that telling you when the spreads get that large comparatively to something like Bitcoin, where it can be within a cent across all the exchanges?
that would
Like
tell
fundamentally
me
high level.
that someone is, you know, taking a position on one exchange, and probably, you know, you get one large buyer on one exchange where it's, I guess, a primary exchange for something like a $50 million, $30 million project, and someone sees, oh wow, there's $1 million offered on ABC Exchange. You're going to go to ABC Exchange, take out the whole book, and buy what they want, so they don't have to mess around with, you know, well, I can buy $1,000 here. It's kind of like it's what the, I guess, Wall Street brokers do for larger institutional clients. We just don't hear about it. Kind of touched on it last time where someone wants to buy one Bitcoin, 10, 100 even, you can probably go to an exchange and get that done. But the question is, you know, on 100 Bitcoin, you know, you start to get upwards of $1 million. Do you want to have $1 million on an exchange that you are not comfortable with? The answer is probably not. Or for me, it would be probably not. So someone that's trading larger than that, like, hey, I'd like to acquire 100 million in Bitcoin. I can pay up to $10,000. I'm gonna put word out to large, basically brokers. Those brokers start fishing around, and somebody's like, "Oh, I can buy 5 million at 9,000. I can buy 10 million at 9,200. I can buy 45 million at 9,650." And they acquire it, sell it to somebody, and you know, you slowly see the price moving up because there's someone buying, but they're basically paying a broker to do it. Where on smaller projects, basically everything outside of the top 20, someone wants to take a position in something, you're going to go to the largest exchange. So I've seen that especially in January, you know, of 2018, where you could get, you know, they'll get arbitrage back in line eventually. The question
Right.
is how worthwhile, Jeremy, is it for someone do that. Like, you know, if it's $100 asset and the price ranges from 100 to 120, do I have it? Do I have accounts on all the exchanges right now? Do I have collateral, or am I kind of buying? Am I blindly buying $100,000 of, you know, coin ABC, and then I'm gonna try to send it to the other one, but I haven't checked the wallet
Right.
to see if they're closed or whatever. So I think you
Yep.
see more arbitrage opportunities in the not top 100, so to speak. I don't know if that
Right.
clarifies.
Yeah. So what the fundamental reason I'm asking is kind of because I'm trying to back into like something that's a high level metric, like to Tim's point, some of the things that we can actually build, right? So if you think about if we can get a bot as an example that scans all the exchanges for the prices, and we're seeing that there's some sort of price discrepancy for a particular asset, does that lead me to believe that that's a unstable asset? Right? Is that the word that we're looking for? Would that equate to a stability rating that we could build for an asset comparatively to Bitcoin, which to me is a lot more stable because the spreads are thinner? Does that make sense? That's what I'm trying to back into.
Yes. Now, here, I want to give you an example of something I told you guys. I told you specifically, Jeremy. So
Yep.
you'll see right here, this is Nibix or Netbox as referred to. 2.4 million market cap, everything, you know, checks out, $90,000 in volume, so seemingly reasonable. A la what you were talking about, it looks like $30,000 of the volume has traded 4 cents, where the other exchanges, this one is trading at a major discount. And I know this exchange to be fake volume, so I guess that would be an example where I'd have to check if all the wallets were open, and I had an account there, then yeah, I would consider buying that. But I would, the more they match up in a larger name, and I'll go back to Bog Coin, for example, it's a number 30 project, you know, 300 million market cap, 68 million volume. And we look here at the exchange prices, and we see Bittrex is number 1, volumes 100,000, 12,000, 200,000. You know, not one exchange really overwhelming, but I look at the cash price 0.024, 0.0023, 2423, all very, very reasonable. Where keep in mind when talking about Satoshis, which is right here, 0.0027, you know, the bid offer on this is going to be 3%. So that's why, to me, Dogecoin for transferring and things of that nature, the price is pretty much one tick wide in Bitcoin terms. And I can see that their top 20 are all the same, going all the way down. Top 50, top 100. You know, here's the first one. All Tilly that is not in the 223 or 24 handle. They have $200 in volume. So probably not where I would head, but and again, I don't know a touch about All Tilly. I see they have a Moon Coin, Dogecoin pair. Never traded that one, but you know, so these become more believable. And actually, Bitcoin, I'll show you something. You can see this still, right? CoinGecko, I hope.
Yep.
Okay. So when we look here, I'd say this is kind of a low volatility time. And I remember in late 2017, there were like arbitrages for $3,000 or $4,000 in Bitcoin. A la what Jeremy was saying, 85.67, 85.83, you know, 85.84, going all the way down. First one that looks a little different is here, 86.24, but I guess one would have to ask, are you going to buy it at Binance, hope to transfer it? There's probably a $10 fee. It takes 45 minutes. And then go to sell it for $50, I mean, assuming there was one coin or a half or whatever. But yes, hence this is why Bitcoin has the dominance, because of the liquidity, and pretty much whichever exchange you go to, it's 85.40 to 85.70. I mean, here's the one standout. It's on Luno exchange in ZAR is the South African rand. So it could just be the last price that traded there, but you know, herein lies why Bitcoin is dominant. And even Ethereum Classic, which is one I often dabble in, you'll see that this is, let's see, give me 1 second. You know, this is the 22nd ranked coin, and it's easy to see since it's in dollars and cents. 508, 507, 508. Okay, here it's slightly different, but going all the way down here, that's your metric. If you want to know my opinion, Jeremy, the more constant the price across the more exchanges, the higher the ranking, in my opinion, would be. Where if you have something where it's in the top 100, but there's only $1,000 of volume and the price is $100 on one exchange and 200 on the other, I would question very much so, you know, why it's so much better on that other exchange, so to speak.
Yep, makes sense.
So I think we could gather the like fees that are on a particular exchange and transfer fees and stuff like that, and the liquidity. And I guess we could do our own kind of search for arbitrage opportunities, or have measures of coin liquidity across exchanges as like a stability mechanism or something. Yeah, what metric were you thinking of, Jeremy?
You hit the nail on the head. Stability was what I was thinking.
Cool.
So, I mean, we have a stability coin score, but he named it that. And he's no longer with us, Spencer. But it's really a volatility score. I don't even know the methodology for which he put that together, but we can definitely refactor that. That's going to be secondary to obviously the global market analytics page. The second phase of that is obviously diving in to each project and providing a number of different details that Christine had mentioned a little bit earlier. So coin scores will be applicable to not only applicable to each individual asset, but I think something that I'd like to incorporate with the indexes themselves, where we could actually just quantify the coin scores per coin that is comprised of the index, and then just do some sort of average of those coin scores so that we can have a index score per metric, which can include volatility, stability, community, sentiment, etc.
And Jeremy, I'll add, I guess, what in my mind seems to be like the obvious, but for the recording, I'll explain it longhand. The more exchanges something is on, the more widely recognized it is. The more people you have putting bids and offers out simultaneously, and therefore the more chances for arbitrage or not for arbitrage. Where a single listed low volume coin on one exchange, the price can easily move 100% simply based on someone selling or buying. I've seen it all the time. And with, I guess, the larger, really the top 25, 20 projects, they're pretty much listed on your top 150 to 100 or even more exchanges. And if something's off, the high frequency arbitragers will eat your lunch. Like if there's somebody paying 9,000 on Bitcoin and they're buying one, even on a small exchange, there's guys that have links to pretty much everything.
Mm-hmm.
So to do the arbitrages, you basically have to have some sort of account with basically Goldman Sachs or a large clearing firm. So you can essentially pay a small fee every day and have access to Bitcoin, have access to Ethereum, have access to Tether or whatever, you know, USD token, stablecoin is accepted at all these exchanges. Because if we just went in with $8,500 and it's like, oh, they're paying $8,600 on this exchange, and we bought it at $8,500 and sold it there, and then somebody's paying that. It's not the truest sense arbitrage because we essentially put our first monies in there to take a long position, where the arbitrageur essentially spends his money setting up the LLC, getting all their paperwork and blah blah blah, and on a daily basis just remains somewhat price neutral and just waits for those few openings where there's those huge sweeps.
So Steve, you just gave me an idea.
Yes.
As it relates to like a larger list where we're listing all crypto, right? We already have a visual for it. I'll show you guys. It's just like a rethought version of what you see on CMC. What we're going to do is the following, right? We're going to go along the lines of our branding. So everything will be CG based, right? So just like the CG15, et cetera. So people become accustomed to utilizing that as their vernacular. What we'll do is we'll do our methodology, which will take a little bit of time and refinement to be able to actually get it down to where it's automated. That'll be called the CG and the CG rankings. And then my thought is, it sounds like there's other methodologies that make a lot of sense. As an example, I mean, you could do volume weighted average. You could do things like, ranking by liquidity, right? Ranking by the amount of exchanges that it's on, which could also equate to liquidity. But my point is, it seems like there's an opportunity to provide the community with different options as it relates to the rankings. And I know we've kind of done that with sectors, but if we really wanted to think about this and provide a lot of value to the community, I think that's how we do it. We have our own methodology. If somebody cares about liquidity, then very quickly they can say, okay, these are the top coins that I should be trading on, which doesn't necessarily, to your point, correlate with market capitalization. They can look at it by market cap. They can look at it by listing ones that are listed on trusted exchanges, right? So there's so many different ways we can slice and dice this. It would be nice to give people the option to look at what is important to them from a ranking perspective. What are your thoughts there?
Well, I think that you showed me, or you pointed me to a website months ago that had done some due diligence on exchanges, and
Nomics. Yep.
yes, I wasn't going to say their name, but
Nomics.com.
since you did.
Oh, it's fine.
Okay. So
this is internal for now.
we did some due diligence on these exchanges and said, these are what we believe to be most reasonable and the most trusted volumes. I think that if you wanted to go a step further and basically price things out that are on shit exchanges where it's one person, where there's just one person trading with them. So I think I showed you guys those sheets months ago where on those DEX exchanges that do bit shares, you can see who's buying and selling. When I saw one account literally buying and selling, and that was the only transaction, like, wow. And that's a $5 million project. Good luck to that person that comes in and buys it, because I don't know if it'll be there, but kind of incorporating the, I guess, exchange trust score and volume. I don't know, kind of putting more pieces of the puzzle into something to, help people make their own decision on, is this trustworthy or not? Single list on shady exchange, not trustworthy. Bitcoin,
right, that's what I'm saying. But
yeah.
would you care about that? I mean, like, you're a trader, right? So if I give you a rankings based on liquidity, so it wasn't that you're looking at CMC and you're like, oh, I want to trade that coin. But when you actually take the time out of your day to dive into it, you realize that it's only listed on one exchange, and that one exchange, it's an obscure exchange, is driving $50 million, even if that's real volume or not, we don't even know, right? In the volume, which then leads to it being ranked higher, versus you as a trader probably want to see liquidity, meaning it's listed on trusted exchanges, has reasonable volume that's deemed as real in quotes. And that's something that's a lot more intriguing to you. Is that fair to say?
I think that, simply put, the number of exchanges that something is listed on is of value. Where I'll give an example.
But yes and no, right? And I'm
Well,
sorry to interrupt, but like yes and no, it's not only that, it's a function of how many high quality ones. And then lastly, even if it's high quality ones, Steve, to you, it probably wouldn't matter if it was listed on 50 exchanges if the average trade volume across those 50 exchanges happens to be $1,000 a day. So it probably needs like 3 layers to that equation.
well,
Or no.
the thing that I've realized, and this is just from, I guess, having, reasonable sized investments in a number of, the not top 100. And it's like, to get on an exchange for a project that's $1 million, they're not going to they don't have the capital and the balance sheet to get listed on Binance. Like, I can tell you,
Right.
Binance costs about 20 Bitcoins to be listed, and at least, and then you have to keep a volume metric up. So they would steer you to a volume provider, basically. I've tried to talk people, OKEx. I don't know that, you're right. There's a lot of layers into something. That's why the Bitcoin family of forks is, by forking Bitcoin, a hard fork, you get on every exchange that Bitcoin is on. Hence why Bitcoin SV and Bitcoin Gold and Bitcoin Diamond are pretty much on every single exchange there is. It's kind of, you're giving a lot of your project away, but you're also gaining massive, massive exposure.
Jeremy, if you're a ROM style investor, where you're liquidity providing and market making and all that kind of stuff, all of those things that you just said are completely true. If you're in part of Steve's world, where you're kind of like a venture guy who's doing some fundamental analysis, then if you really think something is worth something, even if it's hard to get, I think it might be worth investing in. But if you're a trader, everything you said is completely true.
You know what? There's something. Well, I'm glad to hear that. That it's interesting just to dive into this and realizing that there's a lot of layers, and that it would be important to present this data in different ways based on the input of the user, and that goes in line with the whole strategy that we have at CoinGenius, which is ultimately, after this first iteration, is to move towards a more customized experience, so each user can get access to what they want in an easy to use fashion. Now, one of the things that you just talked about, Steve, that's really interesting as well is gave me an idea about the different exchanges out there. So if you think about a Binance, you think about Kraken, you're thinking about Coinbase. What if we developed some sort of rating system out of 100, right? And each one of the, let's just say, top 100 exchanges is assigned a value. So let's just say you get listed on Binance, maybe that's 25 points. Coinbase, maybe it's 30, but maybe something like P2P or whatever that one's called that you told me about is like a 0.01. The top 100 would equate to 100 points in total, and that could be an interesting metric that I think is really valuable. That basically gives you the answer of what I think you were alluding to, which is how powerful is it by what it's listed on, and then we can just represent that in a numerical value.
So that would kind of be like an exchange dominance thing based on, where the pie can only equal 100%.
Yep.
I mean, we should also toss something in there that indicates whether or not that exchange is allowed to do business with U.S. citizens, because we're targeting the U.S. to begin with.
Yeah, but I think in the crypto world, with VPNs and stuff like that, that really doesn't matter. That's just my personal opinion. Like, sophisticated traders are not going to care. They just want to, because look, metrics like this, I don't know how valuable it's going to be for
Oh,
a
I
retail investor that doesn't understand it, but for somebody who's a lot more sophisticated and they want to dive into like fear and greed index, right? They're going to really want to read through Tim's methodology and his approach to that to see, does that make sense? And in that same vein with this type of score, I think they're going to want to see, does that make sense? Because they're global liquidity providers.
Right.
To Tim's
That's I
point,
guess my thought.
to Tim's point, having a data point around each one of the exchanges, can you legally trade this in the US? That's a huge data point for us to understand about the exchanges. We're going to do detail by coin,
Absolutely.
detail by exchanges as well.
Have to do it.
100% one of the metrics that we should store in the back end, and we'll represent that once we have the same thing that we have, to your point, with the coin details. It's like one of those little flags, right? Legal versus not legal, and if so, which country? Remember, the same thing there. We'll do the same thing with exchanges.
We'll have
and we'll
it.
just do exchange rankings, and yeah, and if you wanted to peel back the onion and dive into each asset, you can see which assets are legally traded in the US on that particular exchange. That is very interesting stuff. That's just a lot of work.
Hey, Jeremy?
Yep.
I might have an idea on this, and I got this from some of the smaller exchanges that I've seen, come and go and make changes both for the positive and negative. I'm sure that most on the phone call are familiar with the term KYC, the know your customer. You need to show a driver's license, take the picture with, showing the face.
Right.
And what I've noted is that I think it's all going that way eventually. I know for even Coinbase, like back in January 18, like I had to up my levels and had to show a picture and all that, where at first I was like, why are they doing this? And then I realized it's like, okay, put in $1,000, take out 1,000, probably not a problem, but start going into tens and hundreds. It's like they'd like to know who you are. I get that. So that's, I guess, one probably fairly easy metric. Like you get a plus. If the score is 1, then they get a 1+ for being KYC, a 1- for not. And also to Tim's point about the US and all that, I guess in my mind, you might have heard me say the term Coinbase coin. And whether it's the most volume or not, I could care less. But I know for, at least for myself and many in the US, Coinbase is the entry and exit way. So it's kind of like if you turned $10,000 into $1 million of crypto, how are you going to actually monetize that? Because at this juncture, I still can't spend even the mighty Bitcoin at every place I go to. So it's like people would, myself included, either find a bullion dealer that accepts it, or a cryptocurrency, or more likely send something back to Coinbase, sell it, and take out US dollars. And that ultimately, to me, is why when something gets it's, oh, that's the Coinbase pump. It's like, it's not a pump. It's like now Dash, even if I have Dash, now it is liquid. Before, it wasn't. You still had to trade through Bitcoin and then send that out.
Right.
Yeah,
Well,
more an event.
the KYC is specifically for anti-fraud, anti-laundering, anti-terrorism, and for taxes, and that's why Coinbase has started to do that, and everybody else in the state's going to do it too.
Okay.
Yeah, I mean,
Gotta
if you want
run
to be
though.
in the
It's
US,
little after 7 here.
Yep. Got it. Yeah, I was just gonna say, if you want to operate in the US, it's just, you have to do it. And even before they made you do it, you just did it anyway if you wanted to stay open. And that's just really what it comes down to.
Yep.
But Steve, thanks so much. This was really awesome.
Yes.
If anybody
No
else wants to stay
problem.
on and talk about what's happening right now in the space, there are some interesting things. We can stay on for a few more minutes if Steve leaves.
All right. Yeah, I gotta run, but I'll talk to everyone on Friday. Okay.
All right. Take care, Steve.
Okay.
Thank
Bye-bye.
you.
Adios, Steve. Bye-bye.
So for everybody else, I don't know if you've all seen what's happening in space, but obviously there's a lot going on, specifically that of, there's some positive sentiment out there. There's one tweet that I like to follow, or this one person on Twitter, and their name is Benjamin Blunts. And if you haven't followed him, you should. Good predictor of what happens in the future from a technical standpoint, often right, more than wrong, I would say, comparatively to most. And he keeps posting the same thing, which is, history doesn't repeat itself, but it often rhymes. And there's a lot of, validity to that statement, in the sense that if you look at certain charts, especially what's happened, last year versus this year in Bitcoin, the charts, if you look at some of his recent tweets, I mean, it's like a mirrored image in terms of what's playing out now versus what played out in the past. And this little pump that's happening now is like this little, I wouldn't call it a bull trap necessarily, or a bear trap, whatever you call it. I can't remember if it's a bull or bear. Probably a bear trap. But
right now, because
usually
things
comes
are
off.
up, it could be a bull trap.
There you go. There you go. Exactly. So tends to go up, and then if it rhymes with history, it will go back down, probably to about 7,500, 7,700, and then that's when it goes up tremendously. So it might be interesting to just follow this and kind of take that notion into consideration in history rhyming, because like I said, it doesn't follow exactly always, but this is pretty darn close, and it keeps happening week after week with this trend line. So that's that. The other thing that I saw the other day, which is really interesting, and these are things that I'm saying because hopefully eventually we'll be able to provide automated analysis for this to figure out what's going on. But I went out and walked my dogs, and I think I told Christina this, I was on the phone with her, and Dash on Coinbase only, at least what I saw, was $75. By the time I went outside, I was on the walk, I got a notification and I went up by 10%, and it was at 82, then I went to 85. Long story short, it went all the way up to $102 just while I was on the walk, and then it came all the way back down to $77.
Right now it's at 74.
Within a 30-minute period, and I looked at all the other exchanges, and it seemed to only be on Coinbase. Huh. So anyway, interesting stuff. Steve probably would have thoughts if he was here, but those are those interesting situations to where creates an opportunity for somebody. And I just happened to be looking at my phone at that point, and those things happen all the time. And that's why we're trying to get to these
alerts. Yeah, automated.
Yeah, these automated alerts, because if I knew that, and you get to a certain threshold, and then all of a sudden you see it even drop down by $2, $1 from that 102 high, you know that there's an opportunity maybe to short it. Or if you're seeing some short momentum, from 0 to 10% in a 1 minute time frame, typically that goes up higher than that with that type of velocity, because then people start getting wind of it, they start FOMOing and buying in. The same thing happened with a coin a little while ago called Cyber Miles. And this is, I had FOMO and I saw that it was going up tremendously, and I bought in. I said, oh, maybe they finally caught on. Maybe they just established a partnership. Like, I didn't even have time to go and research to figure out what happened and what was driving that. I just wanted in, and I rarely do that, but I had been following Cyber Miles for a long time. I have met the CEO before. The Dallas Mavericks arena was accepting Cyber Miles to pay for stuff in the arena, so I knew there was some good ties there. But sure enough, when I got in, it was the height of what it was, but it went up literally 95% in one day. And then it dropped down by that whole 95% and some within the next couple of days.
Yeah.
So it's just interesting. Like, if we can figure out some of this stuff that could apply to a number of, different assets, but it's all based on velocity and time, that could be a really interesting notification that we could start sending out.
I agree. That's part of what Ram talks about, of exploiting those pockets of opportunity. I will also say from my side, if you guys get a chance to look at the Coin Genius Medium blog and the content that we put out collectively from Marco, Vikrant, and Tim here, basically what the news on the street is that not only is the complete market regime, the market regime has officially changed. What the days were between April and September is officially over. We're now in a brand new market regime where BTC is decoupled from the metals. We're seeing obviously price fluctuations, but what we see happening around the world and event triggers is there could very much be an opportunity for BTC to go even lower than this, especially as we start to approach Brexit. So there is probably a lot of volatility, and I agree that, you know, you could easily, so Vikrant does support resistance levels, and he says basically like the low is all the way in the 4s. The medium next one that we'll probably hit is down around 75, but like it could go as low as that. So depending on how much the ominous they push it down, you know, based on positioning themselves, and we see this cash grab happening, that there is very much a potential for another price downward spiral before Brexit, and then seeing a ton of liquidity move into the space at that low price and then just ride the wave all the way back up. So even this 8 zone might not be the low end.
Okay, I agree with some of that, but then I also start thinking about the flight out of Hong Kong and the money going into, you know, British pound sterling, or at least the British coffers, and that effect on holding the Bitcoin price up.
Yeah, we've already hit 75, 76, 77 in the last week.
Right.
And it's already, I don't know if you know this, Christine, but today, I mean, it's already up to 85, 86.
I saw it. I've keeping an eye on it.
Yeah, so it's interesting, but I agree. I think, like I said, if history rhymes, and this is going to be really interesting from like a event trigger standpoint, right? As we develop event triggers, we can develop event triggers that are price-based and momentum-based. And if these continue to happen, and we can see these little rhyming patterns over, you know, throughout history, then in theory, coupled with some of the other things that we have, like as verification methods, like I would use sentiment as like a verification method to verify that indeed there is either a regime shift that we're predicting or an event trigger that might have the same impact as in the past. So these are the really interesting things that could happen and could play out that we can attack. It's just a matter of, you know, just taking it one step at a time in terms of what is the lowest hanging fruit opportunity. But as it relates to that price, I personally feel that it's going to go down again before it goes back up. But as we get closer to obviously the halving, it's always increased. But then the height of it usually comes 100 days, I believe. Don't quote me on that, but I believe it's 100 days post halving.
Yeah.
And it hits its all-time high.
Yep.
So it can be a roller coaster within that time frame is the point.
I think we should strap in for a roller coaster. I think that's what's going to happen.
Tim, buy the dips, plural.
Buy the dips, plural, exactly. So Tim, just so that we have it on record here, so that in case anyone hasn't been able to hear it, can you give the summary of the Hong Kong and sterling conversation? Sorry, I think Tim Bogert, I should say. Tim Bogert, you heard it and you can summarize it in ways that are digestible. And then Tim Hesselsweet, I would actually like to hear from you as well. So Tim Bogert, if you can lead that and summarize, because you kind of alluded to that earlier, and I think it's really important content.
Right. So I'm actually regurgitating a little bit of what Keith had brought up, and then I looked into subsequent to that conversation on one of our R&D calls, and that was that because of the uprisings that are going on in Hong Kong, there is a flight of money that has to find its way out of Hong Kong. A lot of that is being done with Bitcoin, but in other cases, it's simply being transferred into British sterling because of the relationships from the banking standpoint that Hong Kong's always had, especially since Britain used to own Hong Kong. So as that money flows over to Britain, they are either A, going into Bitcoin as a prop, or B, waiting for Bitcoin to settle lower in order to put those funds into Bitcoin. So there's a mixture there. I've also read recently that ATMs are running out of cash in Hong Kong, and that for that reason, digital assets are becoming more and more useful as a method by which to hold on to their money. So those are the things that I know about that, or that I think I know about that right now. But I think we did find some correlations in the R&D call that made sense with regards to timing and what's going on in Hong Kong and the money that's trying to find its way out.
Very cool.
Well,
Tim,
I'm interested-
oh,
go ahead.
sorry. I was just gonna. I really am excited to hear from Tim, the other Tim.
And so certainly the issue of capital flight from China and other Asian countries is happening. And the other thing, just in terms of currency repression, we have negative interest rates all over the world. I mean, Germany has them. The response to get into a safe currency definitely exists everywhere. And one to change a little bit in terms of like trigger market events that are happening. We've got a Fed meeting on October 30th, so right after Vegas. And I was going to look at the historical tendencies post Fed meetings with Bitcoin and other cryptos. And I will do our own Coin Genius research into the effects of the halving as well. So great news content and fodder.
Beautiful.
Yeah, there's some really interesting things going on from a macro perspective right now. Greece, negative yielding interest. It's basically people are willing to pay you money to put money with them around.
Well,
the world,
look at what the Fed has done over the past, 4 weeks now, with the billions of dollars that they've flooded into the repo market to support it. I mean, there's some serious fracturing going on here. And when we're printing money like that, we haven't done that since the Great Recession in 2008. So I don't know how that reads out as a whole. I mean, but there's certainly some things here that would make me get nervous, especially when I'm seeing billions and billions of dollars being printed by the Fed in order to support that part of our market.
Yep. And then you think about QE, which is quantitative easing. I mean, this is also happening, right? So I think Powell just said the Fed would soon announce measures to add to the supply of the reserves over time, which is basically announcing quantitative easing, which we've seen a direct correlation from that comparatively to the price of Bitcoin. And that's actually very, very good for this particular industry over time. Yes, I think as it relates to the ATMs, I think they limited like $120 like is the maximum. So now it's like a cap just to be able to keep up. But people very soon around the world are going to turn towards other means to store their value because they can't even access their own in their own current banks. So, I mean, there's just this massive macroeconomic firestorm that's brewing, and people are now taking things like digital assets a heck of a lot more seriously than they ever had in the past. There's $17 trillion worth of negative yielding bonds right now.
Oh yeah, indeed. Scary stuff, actually.
It really is.
Yeah, I mean, good for our industry, like you said, over the long term, but pretty freaking scary.
Yep.
I'm not as scared.
Another interesting fact, China added over 100 tons of gold to its reserve this year. And typically, most countries and governments know when there's some sort of economic crisis, brewing, and you start seeing the movement of gold and gold hoarding in different countries as a pretty strong indicator of that. And that's been happening, by the way, over the last 7 years in bits and chunks here. But 100 tons is no joke.
Huge. I mean, look at Warren Buffett. He has more cash set aside than he ever has, ever, because he's waiting for the crash so he can buy in cheap.
That's pretty much what it feels like.
I'm going to give him a call. See what he can do for us.
All right. Well, any other last thoughts on analysis for this week?
The only thing I have not heard from one time at all this evening is Mr. Sipto. What the hell?
Yep, I'm here. I'm just listening in the background, doing a little bit of what's it called, the HubSpot. I'm putting together a spreadsheet for all the people at the first CIS and then WCC.
Yeehaw. Thank you.
Yeah. And I got the coin logos done.
Nice.
Hey,
Nice.
Sito, let me, I'm really excited about that too, but for the purposes of this call, what are your thoughts on the market this week?
I think that we're like basically the pump in the cryptocurrencies is definitely an effect of what what was talked about with what's going on in Hong Kong. And I am also very not, I don't want to say very, I'm concerned that we're going to see some dumps to this. It's moving up too quickly. So it's the whole thing of like, all of I haven't had a chance to look too much into what was it, the BitMEX, like the calls that are put on higher, or like on different orders. I'm actually looking at it right now to see it really quickly to see what people are like, where these orders are put.
You want to share your screen?
What's that? Yeah. Hold on one second. Shabammer. But
He's
there's
browser history.
what's
Sorry,
that?
I was just kidding. I said you were deleting your browser history.
No.
Christina, if you want to show it after this, I just sent you an email with that chart that I was referring to earlier.
Perfect.
But
I will
yeah.
do that. All right, Siptos, take us through here. And Tim and Tim, really excited to hear your feedback and open a dialogue if you guys have the time.
It's just this right here is scary how fast it went up. And that that whole thing of but at the same time, I'm gonna change here to like the 30-minute. This is we were sitting so flat for so long that it's interesting that wherever whatever, what's it called, made this happen in the markets, because the stock market went up again today, but the futures for tomorrow look really bad. It looks like the stock market's going to open up lower tomorrow. So we'll just see. Like as I'm saying too, let me see if when we're looking at like these orders. No, there's a lot more sellers at the 8,700 range than there are buyers. There's like 34 million at 8,750. So, well, we'll see. I'm optimistic that no, like we're setting ourselves up for November. Historically, November is gonna be a great month for us. So we'll see what happens, and the rest of the market. You know what? Let me look at Coin Market Cap really quick, just for fun.
I don't want to rhyme to last winter. Like November needs to be good and December needs to stay good.
Yeah.
Don't rhyme to last winter.
Well, if you remember, November was when it just all turned to poop before.
Yeah.
But
I feel like there's more happening in the global economic. I mean, so Steve did a big analysis of like everything crashed on December 31st. It wasn't just Bitcoin. It was everything. Everything went in the shitter. And I think that my concern here is that what the smarter people than me are lining up is that there are things globally happening that could be very, very bad. So I think we're in for tumultuous times.
yeah. I'm following the Hong Kong story just because I can't believe it's lasted as long as it has. And the idea of what those people are doing to protect themselves from, the inevitable like future of the government really cracking down and just finally having enough of what, the protests.
Yeah, I'm expecting a Tiananmen of some sort in the next 3 months. That's just my guess.
You're not the only person that says that.
Yeah.
That's some crazy talk right there, because it's not getting any better. The whole thing of if you watch what like last weekend with like everybody wearing masks and there's a ban on masks.
Right.
It's like shit, like people are getting pretty nutty. But so, you know, going back again to looking at, this is the first time in a long time that I've been able to open up CoinMarketCap and see all of this red, all of this green.
Right.
And, you know, really consecutive, like usually it's just a couple, not even a couple, like nothing's really pushing. Like there's some 10%ers. I saw 15% down here.
There's a couple of 20s in there too.
Couple, what's that?
20%ers I saw earlier.
Yeah, it's nutty. That's a little on a side. I wanted to ask out loud with everybody, do we want to have the stable coins in that predict the flip, in predicting, like, you know, the prices? Because there's
Sorry,
Tether.
what was that?
No, I don't think
Stablecoins and the indexes? No, with the question.
He wanted to know if we should include in the photo booth thing for WCC, if we should include stable coins, and they like hold it up and be like, I predict it'll be $1. So I think we're gonna have to.
Whoa, your speaker just got crazy. Oh, wow, that hurts.
Yeah, that was loud.
Wow.
But
Right, you want me to say no
the
stablecoin?
The CG15 particularly excludes those,
okay.
which is the CG15 is what we're trying to do with the amount of assets that we're having at the conference.
All right. Like I thought about it while I was cutting out Tether. I'm like, oh, this is going to be a weird one. But
Yeah. No, don't do it.
Right.
okay, so at that rate, because I'm also anticipating that I'm going to be going to the printer, you know, a couple days before, just to print a few more down here that might pop up and get into the top 15, because I printed up to Ethereum Classic right now. And looking at Ethereum Classic next to Cosmos, there's not so much that has to happen before Cosmos would go up. And then also the fact that we're going to be taking out what's it called, the Kim coin and Tether, and the other, I think that's the only other one that's in the top 20 for stable.
Are we sticking with Unis S said Leo?
No, this one is that's the Kim coin. That's like
Right.
stable coin.
It's like a Bitfinex stablecoin, basically.
Right.
Yep. So we'll just exclude that for now. Tim,
Yeah.
that leads to a really good question, right? So current state is different than ideal state with anything, right? Especially on our platform.
Right.
So as it relates to the indices that you've built, we talked about a lot of stuff regarding the price, the rankings, how we're going to do that into the future. So what you have now is basically predicated on data from a third-party data source that has their own ranking algorithm. In the future, is that something that you'd want to move towards something that we develop as our own proprietary ranking to then justify what's in those indexes, even though it might not be globally accepted as a ranking? Does that make sense? I just want to know your thoughts on that.
I would say so, and I think I just don't know that any data provider is going to be in existence in the future. And something that happens. So one time you asked the question, like, what would be like a hedge fund worthy data point, and something that's very expensive is called survivorship bias adjusted data. So if tomorrow, like, Apple and Google merge and they call it like, you know, incredible or something like that, both Apple and like Google would cease to exist, and then their like data wouldn't be at like Yahoo Finance or like cheaper free things. So I definitely think that we should try to surface it from exchanges and make our own methodology in the future.
Yep. And
I agree in that if we're going to be the go-to and the trusted source, we have to do it on our own.
Yep. What was the methodology behind that metric that you were talking about specifically? I mean, it sounded like a super long name, so I'm assuming it means it's pretty sophisticated. Tim Russell Suite.
Yes. Which metric?
No, the one that you were talking about that's like really important to like hedge funds, as an example.
Oh,
You said something, like something along those-
survivorship bias adjusted data. So
Got
it's
it.
just it's or another word that's probably more succinct for that is point in time data, which
Cool.
just means that it's not adjusted in the future. It's like what happened at the time is what is something you can access.
That makes sense. Well, it looks like Christina pulled up something really intriguing. So, Christina, sounds like you might want to talk about this.
I can't take credit for it. This is
Crypto.
Crypto, his own, decided that we needed to see what 3D trading data looks like. And I was like, excellent call, man.
Yeah.
Still love this thing.
I can watch this all day long.
He
Also,
also,
somebody wants to take it up and go bother him again. I did it for a while. I tried to even get him some funding just so we could build our own custom integration of this. Somebody wants to take it upon themselves to go bother the heck out of him until he can build us something custom that we can integrate. I'm all for it.
Why do you go dark?
Okay, before we get into that, I think we need to have our own, like the stuff that Tim Hesselsweet is working on. Tim Hesselsweet, you probably don't know all of this, but we have the ability to partner with some pretty sophisticated 3D data all around trading. And, you know, Jeremy and I have always been data nerds where it's kind of like, if you can do it in a database, you can make that AR, VR interact with it. You know, there's so many things that you can do with data. But just here, you're seeing BTC current price in 3D. And the concept that we could use that for indices, we could use that really for any kind of 3D visualization you can think of in real time is very much a possibility with this technology.
Very cool.
To be honest, it's really cool. It's not, I know it sounds bad, but I mean, it's not like the most useful thing in the world yet, unless you develop a better overall like UI and educational, like step-by-step
Yeah, that's what we have to do.
way of utilizing it. But it's a shiny object, and that's what's interesting because no one else is doing this. I think it's really intriguing if we can get it integrated. It's not only for price data, and this is order book data, real time from Binance, by the way, that's what you're looking at. But we can do it for things. And so I was trying to get him to build for like sentiment data. So you can see sentiment spikes and what words and hashtags are actually being chatted about and just visualizing it in a completely new way. And that's what's interesting to us here.
Yeah, I mean, this particular screen right here is just doing the same thing on repeat over and over again, really, isn't it?
Yeah, Sipto's not logged in. Actually, Sipto, I don't know. Can you go log into the actual one so that you can see it happen in real time? Because you have to log in through your Google.
Oh, here, let's see. Oh, okay.
See now, right. So this will actually show how it transpires, and it'll actually show walls being built, falling down, orders coming in, going out. It'll show resistance and so on. And instead of being on repeat like we saw on the screen before, this actually shows as they develop front to back.
It's really cool in times of volatility where it's like to the left, to the right.
Yeah, well, I mean, look at what happened just there, right? I mean, not a small one, but
all over the place. It's really fun to watch.
But the buy walls and sell walls are obvious.
I like the idea of attributing this to the sentiment though too, and exactly like what's going on in the market other than the actual like the chart. You know, like to be able to get ahead of it. I want to say it's Maslov. I was listening to Life After Google again this morning, and it keeps talking about this this guy that pretty much is like the I wouldn't say inventor, but he really pegged predictability. And he's like, you know, if you and it's the same like law that this guy came up with is what predictive typing uses. Like it, you know, how your computer knows, or your text message, it pretty much predicts what the next word you're gonna use is. Well, it's like if you can do that, then you can predict pretty much like anything, you know. And it's a law. It's kind of going through and being able to anticipate what's going to happen next. And it was the first time that I heard Jeremy mention that it's like, we want to get 24 hours out and see what the price of Bitcoin is going to be in 24 hours. That's not to say all the volatility that's going to happen in between now and 24 hours from now, but it's just an interesting concept that everything has patterns, and there's like a sense of predictability, especially when you're dealing with algorithms and AI that's taking the stuff and analyzing it in real time.
Cool.
That was my cat. Sorry. Come on, Chocolate.
Well
That
said,
was
sir.
it. Exactly.
What's your cat's name?
Chocolate with chocolate and tofu.
Nice. I've got Biggie Smalls and Slim Shady.
Thank you.
Of
You didn't
course.
volunteer. I was going to ask for it.
Of
Just
course.
say it one more time. It just makes me so happy.
Hey,
What,
Christina,
Biggie
can you make sure to label both their files cat people, please?
Small.
Kidding.
One other thing, not to change the subject too much, but this is another thing that I am working on that I was talking to Carl about today. I'm putting all of, and I was just playing around with it a little bit more while we were talking, putting all of the contacts that are in CIS into a CSV format so that I can import this directly into HubSpot.
Nice.
And that way we'll be able to do that with like any contact list that you can give me. Jeremy had mentioned or had shared one of those venture capital like sheets, but it was basically companies. And he thought that was the VC database one that I think you shared with us, Tim.
Mm-hmm.
That's another one that it's not set up like that in like a CSV format because there's first and last names in one cell.
Right.
Yeah, this now that I've really been studying on HubSpot and how to leverage
That's awesome.
it work the best. Yeah, the whole thing about the deals, man, that's the kicker right there is being able to track who's in. I saw in our HubSpot, really we only have one. Let me go over to that really quick and I'll show you.
And Sipta, like I told you, if you ever need to have a question answered, just email Nick and Raul on our team. Between the two of them, they'll have the answer to you within that day, and probably a pretty long-winded answer.
I
Yeah.
forgot that Nick is also a genius in HubSpot. Thank you for reminding me.
No, I'm using all of the resources that are online so that I can actually formulate those questions. Because when I was watching a video on these deals and how to like set them up and basically, generating the pipeline, then I'm like, oh, I wonder what's in our deal section. And there's really only this.
We did like a template, so Raul.
Christina, can you stop recording real quick? Since we're done with the analysis portion.
Wrap up.
Awesome.
Okay, so thanks for joining us on stage. Bye.
Sorry about that.